This is Horizons Middle East and Africa. Our top stories this morning.
The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world.
Straight to business, President Trump signs a slew of executive orders at his inauguration celebrations, targeting trade, energy and border control, as well as reversing a whole host of Biden-era policies. Meanwhile, the dollar jumps and Asian stocks trim some of their opening gains after the US president says he's applying tariffs on Canada and Mexico, but for now, holding off on China. Plus, Trump expresses doubts over the success of the three-phase deal in Gaza and cancels an executive order sanctioning violent Israeli settlers in the occupied West Bank. It's just gone 8 a.m. across the Emirates. I'm Lizzie Burden in Dubai, in for Rachana Mehta. Very good morning to you, and what a 24 hours it has been in this market. Get the physio on board because they've got whiplash this morning. We had Donald Trump's day one. At first, no mention of tariffs, and then a reversal of that. We are going to dive into the tariff details more in a moment, but look at the dollar now. The dollar is up 0.3%. It's been on an absolute rollercoaster from its worst day in more than a year yesterday to a slight recovery this morning. Futures stateside pointing higher after the MLK Day holiday yesterday. The MSCI Asia Pacific Index heaving a sigh of relief on the tariff story, and Brent flat to the downside, but that's just for now. We're going to brace for more declines to oil as Trump fleshes out this drill, baby drill policy. I just want to flip over and give you a longer view of the dollar story here, because you'll remember the last time Donald Trump took office 8 years ago, the dollar fell about 10% in the year that followed. And the question is, are we going to see similar price action this time round? Positioning data suggests that we might. We also saw this big dollar rally in 2016, just as we've seen over the past few months. And of course, betting on the greenback has become one of Wall Street's favourite trades. So yesterday's pain and this morning's gain may be a taste of the uncertainty and the volatility that we can expect in the weeks and months ahead. But let's go over to Asia now. Avril Hong's on standby for us in the studio in Singapore. Avril, how are Asian markets reacting to this slew of executive orders from Donald Trump?
Yeah, I think very much as you just outlined there, that pain, that gain, getting whipsawed, that's being reflected in Asia equities as well. The region's benchmark starting the day on the front foot, and then those mentions of Mexico, Canada tariffs, leaving markets with slight losses. They're back up again about 0.6% higher on the MSCI Asia Pacific. I think the key takeaway, though, out of Inauguration Day is that we didn't get China-specific tariffs, not on day one at least. And I think that speaks to the optimism that maybe these trade relations might not be as acrimonious. So Chinese stocks are actually leading the way today. The rest of the region looking a bit mixed. The Nikkei has paired a bit of the earlier gains, highlighting as well amid the dollar slump. The yen managed to climb higher than the 155 level against the greenback, so a bit of strengthening. And, you know, that's really against the backdrop of these expectations that barring any negative surprises from Trump, the BOJ could hike on Friday. Lizzie.
Avril Hong in Singapore, thank you. Well, let's turn back to the events in Washington as Donald Trump sealed an historic political comeback. Sworn in as the 47th President of the United States, his inauguration moved inside the Capitol building, of course, due to the extreme cold, but it was lined with CEOs from major tech firms sitting alongside his family and his cabinet picks as well to witness the transfer of power. President Trump launched his second term with a strident inaugural address, vowing to prioritise America's interests while taking on what he calls a radical and corrupt establishment.
The golden age of America begins right now. Today I will sign a series of historic executive orders. With these actions, we will begin the complete restoration of America and the revolution of common sense. I will declare a national emergency at our southern border. All illegal entry will immediately be halted, and we will begin the process of returning millions and millions of criminal aliens back to the places from which they came. The inflation crisis was caused by massive overspending and escalating energy prices, and That is why today I will also declare a national energy emergency. My proudest legacy will be that of a peacemaker and unifier.
Well, as Averill says, President Trump has delayed unveiling threatened China-specific tariffs, instead calling for a study into unfair trade practices globally. But he says Mexico and Canada may face levies of up to 25% as soon as next month.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
When do you think you would enact those?
I think February 1st.
Our news desk editor Jill Desis joins us now for more. Good morning, Jill. I mean, what are we meant to read into the choreography of these announcements? I feel like it's as notable what he didn't announce as what he did.
Yes, that's right, Lizzie. I mean, look, I really want to focus on tariffs here, right? I realize that, the executive orders themselves didn't actually include any day one tariffs, but I still think that that's really been top of line. Obviously, as Averill just went through for, markets, maybe on the China side, a bit of relief at him kind of delaying those plans. But I'm not really sure that that necessarily means that China's really going to escape the crosshairs here. Obviously, as we were just talking, you've got this focus on Canada and Mexico. By February 1st, Trump is implying, you could see tariffs of upwards of 25%. That type of, tariff would impact some $1.8 trillion in goods and services coming across from those countries. It's trillion with a T, and it could potentially lead to some retaliatory efforts from Canada and Mexico, maybe fears about a trade war between countries that, remember, Trump, during his first term, really kind of at his insistence, fought to renegotiate details of NAFTA, created a new trade deal between the United States, Canada, and Mexico. That's all now kind of up in the air with these potential tariffs on February 1st. And then again, I realize that there's no, new tariffs announced on Canada, but obviously Trump made as a pretty big part of his campaign promise that there could be some potential, retaliation there. He talked at that time about duties of upwards of 60%. I'd really kind of wait until we see Trump's cabinet get in place. Obviously, he wants Scott Bessent as his Treasury Secretary, Marco Rubio, big China hawk, as his Secretary of State. I think that it's still kind of a very wait-and-see mode and kind of reason to be really cautious about what could potentially be coming on China in particular.
Yeah, huge questions remaining to be answered. But what do we know as well about immigration and energy, other areas that he focused on in these announcements, Jill?
Yes, I think that that's where you get a little bit more specificity. So when it comes to immigration, for example, obviously we saw a lot of talk there from Trump and some attempts at ending birthright citizenship in the United States, kind of cracking down on borders, preventing new refugees from coming across. So you really do see like a pretty substantial change in terms of how Trump wants to approach immigration policy. Of course, that was one of the biggest items from his campaign, really kind of, focusing on that area. In energy, what he tried to do there was he revoked offshore oil and gas leasing bans that effectively blocked drilling in most U.S. coastal waters. So really kind of making that push for more domestic energy production. That does seem to be, the very least, something that he's really focusing on for day one. And I think we'll likely see even more coming on that energy front. But I thought in terms of the actual announcements that you saw today, that did seem to be one of the most specific and actionable things Trump tried to do.
And what's next for TikTok? Because, of course, TikTok's fate kind of tied to China tariffs.
Yes, we saw certainly during the Biden administration this attempt at a ban of TikTok. There's a lot of late-stage drama just over the past few days with, the Supreme Court allowing that to go ahead. What we've seen out of Trump is this order, a stay of execution on TikTok, asking his attorney general now to delay for 75 days what exactly happens with that app, obviously owned by, Chinese owner ByteDance. It's been a big topic of conversation lately. It does seem like from what we saw out of a lot of Trump's conversations with the media tonight, that he wants to see if there's some kind of a partial U.S. ownership strategy that he could do here. Trump loves making a deal. He wants the U.S. to own some 50% of TikTok. So I really don't think that drama is going away anytime soon. And it does seem like, at least over the first few months of the Trump administration, anything involving TikTok, maybe a deal, maybe a sale, maybe a ban, I think is going to kind of characterize a lot of, that talk over at least the next few months if he's giving this 75-day stay of execution here.
He does love a deal. News desk editor Jill Deesis, we thank you for that update. And let's dive into the Middle East angle now, because it got its fair share of executive orders too on Trump's first day back in the Oval Office. The White House says that the US president has now cancelled an executive order that enables sanctions against violent Israeli settlers in the occupied West Bank. And on Gaza, Trump expressed skepticism that the ceasefire between Israel and Hamas will hold and that all phases of the agreement will actually be implemented. Take a listen.
You know, Gaza is interesting. It's a phenomenal location. On the sea, the best weather. You know, everything's good. It's like some beautiful things could be done with it, but it's very interesting. But some fantastic things could be done with Gaza.
How do you see the future in governance for Gaza?
Well, it depends. I can't imagine you could have, well, you certainly can't have the people that were there. Most of them are dead, by the way, right? Most of them are dead. But they didn't exactly run it well.
Well, joining me now is Bloomberg's Paul Wallace, who leads our MENA economy and government coverage. Good to have you with me, Paul. I mean, given that the Gaza ceasefire is so fragile, what do you think are the likely repercussions of these announcements in the short term, in the next 6 weeks?
Hi, Lizzie. I think when it came to the West Bank settlers, this was something that was widely expected. The people close to Trump had sort of been pretty critical of these sanctions when they were imposed at various times by the administration of Joe Biden. His comments on the ceasefire and him not being optimistic about it holding are pretty interesting. It's obviously a 6-week truce. Joe Biden very much made out that he wanted this truce to turn into a permanent end to hostilities. And there is a feeling, although he hasn't been so explicit, that Trump wants that too. You know, he spoke in his speech yesterday about how he wants to be known as a peacemaker and a unifier. And most people don't think it would sit well with him if this truce fell apart or if Hamas and Israel resumed the war after the 6 weeks of the ceasefire is over. But that pessimism that he's expressing just shows you how fragile this deal is.
I mean, if even he is expressing doubts that the ceasefire will endure, do you think that international donors are now going to think twice about committing to funding the reconstruction?
I think so, yes. I think in many ways they were probably going to wait, or most of them were probably going to wait for a while anyway, at least until the 6 weeks of the ceasefire is over. There is much more aid flowing into Gaza already. So as soon as this ceasefire started on Sunday, we saw more aid trucks going into the Palestinian territory. And, okay, these aren't trucks that are going in with, let's say, proper reconstruction material, but, you know, it's a start towards rebuilding Gaza. Trump himself described Gaza as a demolition site. He said from, you know, everything he's seen from photos and so far.
He also said some beautiful things could be done with Gaza.
Yes, he's talking as if this is a great real estate opportunity, you know, I don't know, building condos on the coastline of Gaza or something like that. The UN has spoken and said that it's going to take an awful long time to rebuild Gaza. You know, this is going to be, even if everything goes very smoothly from here on in, it's going to be a multi-year project. There's just so much that has to be done. It's even if you get the money to do it, the tens of billions of dollars that will be needed to rebuild Gaza, it's going to be a very complicated thing. So there's still plenty to watch there.
An enormous task. Bloomberg's Paul Wallace, leading our Middle East and North Africa economy and government coverage. We thank you. Well, Yemen's Houthi rebels have said that they will stop attacking US and UK vessels in the Red Sea in response to the Israel-Hamas ceasefire agreement. But the Houthis warn the ships owned by Israeli entities or sailing under the Israeli flag will still be targeted. Attacks by the rebel group have forced many ships to divert around Africa via the Cape of Good Hope, with transits through the Suez Canal down more than 50% since 2023. But still ahead on Horizons, hear why Maybank Asset Management expects the US economy is going to remain strong in the early stages of the Trump presidency. We'll get more on their market strategy next. Stay with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. Now, the dollar rallied and Asian stocks briefly erased opening gains after Donald Trump, the new US president, said that he was considering enacting tariffs on Canada and Mexico. It's been a wild 24 hours. We can speak now to Rachana Mehta, who is the regional fixed income co-head at Maybank Asset Management. Good morning. Thank you so much for joining me. I'm just trying to process all of these announcements that we've had in the past day or so. We had, of course, huge pain on long dollar positions. Some of that's reversed this morning. How are you now thinking about tariffs and how to position around all of this uncertainty?
Yeah, definitely it's going to be tough. So as of now, I think it's better not to take too many positions. If you look at it, initially we were expecting tariff across the board, and now he's only talked about Canada and Mexico. And maybe it's a negotiating tactic, because I believe that if 25% tariffs is imposed on Canada and Mexico, it may shave off about 0.5% of GDP, and inflation in the US may go up by 0.5%. So maybe it's a negotiating technique. So I do believe that dollar will continue to be strong, at least over the first quarter, but second half, maybe the dollar will start weakening because there'll be a lot of impact on immigration, on tariffs. So we have to watch out for that. And I think the most important thing is inflation and the deficit in the US. So as of now, we are staying pretty close to home in terms of dollar, not taking a big position either way, just pretty neutral on dollars until we get a very clear picture.
Well, yeah, I mean, if you put tariffs aside, of course, you've still got the domestic economic agenda, lower taxes. Do you think that the inflationary impact of them would still push yields to 5-6% stateside?
Definitely. Actually, the biggest thing which worries me over every night is the fiscal deficit in the US. I think when Trump took, in 2017, when he became the president, the debt to GDP ratio was about 60 to 70%. Now we are almost closing to 100% in terms of debt to GDP. And we have this tax cut, which he wants to extend, correct? So that is going to increase the deficit maybe to 6.5-7% of GDP. So the whole idea for the new administration is, yes, tariff may give some revenues, but that revenues may not be enough for the fiscal deficit going forward in 2025 and 26. So that is what is worrying us. I think the tariff impact on inflation, maybe short term it's higher, but medium term you expect the economy to slow. So that is like chicken and egg. So but I'm more worried about immigration and labor, because there will be unemployment and the cost of labor will go up again, which may again fuel pressure on inflation. So it's not very, very clear, but definitely I think the new administration is worried about inflation and the deficit. If you look at the new Treasury Secretary, is going to talk about bringing down the deficit to 3% of GDP. So from that perspective, I'm hoping that there'll be something to be done. So for the 10-year Treasury perspective, I think about 5% is still pretty good, unless something totally goes wrong on inflation. So we believe that at 5%, maybe it's good to add duration, because if you look at the long-term U.S. equity return also is in the range of 5 to 6%. So U.S. Treasury yielding about 5% seems attractive from a medium-term perspective, as long as the fiscal deficit is in order.
Well, so if you put all of that together, what's the risk that the Fed's next move is a hike? Because markets really aren't prepared for that.
Yeah, definitely. Market is not prepared. I think the market is still looking for maybe one cut this year. We're also expecting one cut, definitely, maybe sometime in June. So I feel that I think the Fed is going to watch and see how all this is going to impact. And maybe the tariffs are negotiating tactic, and inflation eventually will start coming down, because, yeah, short-term inflation pressure may go up. But we believe that if tariffs are being imposed, immigration, like the deportation is happening, I think eventually short-term, maybe the Treasury spikes up and Fed doesn't do anything. But I think medium-term, you'll expect actually Fed to cut rates given slower growth and also higher unemployment rate. So, yeah, short-term is going to be volatile, but medium-term, we do believe that US GDP growth will slow this year from last year, about 2.8%, maybe 2.6%. So definitely, I think short-term volatility, but medium-term, we do expect actually Fed to cut rates.
I mean, how real is the risk that Donald Trump's administration undermines the Fed's inflation-fighting ability by all of these threats, for example, to create a shadow Fed chair?
Yeah, I think it's going to be tough. Yes, I think Fed will continue to remain independent. Of course, in terms of regulatory aspect, there'll be something from the current U.S. administration. But I think Fed is going to remain independent. So I don't see a big thing on that. Yes, there'll be back and forth, but I don't believe it's going to be a big impact on Fed's independent decision.
And Rachana, I guess the dollar pain would have made it easier for the Bank of Japan to hike on Friday. That's, I suppose, less the case now. If we are going to see sustained gains in the yen, do we need to hear, in addition to a hike from the BOJ, more hawkish commentary from Governor Ueda?
I don't think so. I think they are going to hike this Friday, definitely, but I don't think the government Ueda is going to be hawkish because he also wants to see what are the medium-term impact of U.S. policy in terms of tariffs, in terms of immigration. So I feel he will hike and he'll be pretty neutral. We don't expect a dovish or hawkish stance from him. And going forward, I think the further rate hikes will be maybe 10 basis points rather than 25 basis points. So definitely, I don't think it's going to be hawkish.
OK, Rachana Mehta, Regional Fixed Income Co-Head at Maybank Asset Management. Good to have you with me on the programme this busy morning. Still ahead on the programme, we've got more big interviews coming up from Davos today, including with Sarah Fryer, OpenAI CFO. We've also got UniCredit's Andrea Orchel, Aramco's CEO Amin Nasser, and Ruth Porat, who is president of Alphabet and Google. Plenty more coming up. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. It's 8:25 here in the Emirates. And let's just check in on these markets. So we're going to be coming back from the MLK holiday on Wall Street. S&P E-mini futures pointing higher by 0.2%, a little lower for Euro Stoxx 50 futures. But there's been a lot to process off the back of Donald Trump's day one announcements. There was relief that Donald Trump did not mention day one tariffs on China. And then we did hear announcements on Canada and Mexico. So a lot to process there for the dollar, particularly higher now 0.2%. And oil is currently trading weaker 0.1% at $80 a barrel. We'll have a full check of the markets for you next. Donald Trump saying that he plans to enact 25% tariffs on Canada and Mexico by February the 1st. So we'll dive into that policy with the NYU Abu Dhabi. That's next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Straight to business. President Trump signs a slew of executive orders at his inauguration celebrations, targeting trade, energy and border control, as well as reversing a whole host of Biden-era policies. The dollar jumps and Asian stocks trim some of their opening gains after the US president says he's planning tariffs on Canada and Mexico, but for now, holding off on China. Plus, Trump expresses doubts over the success of the three-phase deal in Gaza and cancels an executive order sanctioning violent Israeli settlers in the occupied West Bank. Well, those are your headlines. It's just gone 8:30 a.m. across the Emirates. I'm Lizzie Burden in Dubai, in for Jumana Basechi. We can go now live to Washington and hear from the 47th President of the United States, who's speaking at the Liberty Ball.
Thank y'all for that one. And Don and Chloe. Chloe, I don't know, Ivanka, she might be as good as this one. You have to see her athletic ability. You wouldn't believe it. You look at her, she looks so innocent. She's a killer. Chloe's a killer. And we have a great vice president, I want to tell you, and a fantastic... And he's got a fantastic wife and helper, and she's done just incredible things for the party and for him. And I want to thank you. Great job. Great job. J.D. Vance, great job. So we're going to keep it going. We're going to have it turned around quickly. This big ship, we got to turn it a little bit slower than I'd like, but we're going to turn it around. We have things that nobody else has. You know, we also have something that it's not politically correct to say, but it's becoming very politically correct. We have more liquid gold under our feet than any other nation in the world. And if you don't mind, we're going to use it, right? And we just left the Commander-in-Chief Ball, which is like a similar size, everyone, and we're going to another one in a little while. We needed 3 because we have such support. There's a longing for competence in this country. There's a longing for common sense in this country. And I was saying before, we're the party of common sense. You know, we don't want to have men playing in women's sports. We don't want to have transgender operations for everyone. And we just want to have a great country. We want education. We want houses that don't cost a fortune. We want low interest rates. We want low taxes. We want a strong, powerful military, and we're going to have that. We did it once. We did it in 2017. We rebuilt our entire military. It was giving away a lot of it. Can you believe it? Given away, so foolishly given away, but we'll have it back again very, very soon. And we'll be making some announcements. You're going to be so thrilled, but we love you all. We're going to be, you know, I'd like to say we are a great nation. We will soon be the greatest we've ever been, and that won't take long. So I want to thank you all for being here tonight. Special people, and we'll see you soon. Just watch what happens. It's going to be big progress. Thank you, everybody. Thank you very much.
Well, Donald Trump is the US president once again. He's there in his stride, liquid gold beneath his feet, so he says. We're going to dive into the commodities story later in the programme. But what a wild ride it has been in these markets over the past 24 hours. If we check in on how they're faring currently, the dollar is actually seeing a bit of recovery now after what was yesterday its worst day in a year. That on the tariff announcements. Day one tariff announcements didn't seem to be coming, and then we kind of had a reversal of that on Canada and Mexico. And so this is why you've got the relief for the Bloomberg dollar spot index. Also for Asian equities this morning, higher 0.5% on the MSCI Asia Pacific index. US futures pointing higher as we come back from the Martin Luther King Day holiday yesterday. Treasuries will also be back trading cash today. And Brent there at $80 a barrel, weaker 0.1%. But are we going to see more declines for oil in the future as Donald Trump fleshes out this drill, baby, drill narrative? We'll keep an eye on that. Let's just flip the board and dive into the dollar story, because, as I say, it's been on an absolute roller coaster over the past 24 hours. And you'll remember the last time Donald Trump took office 8 years ago, the dollar fell over 10% in the year that followed. So are we going to see similar price action this time around? This positioning data suggests maybe we will. We also saw a big dollar rally in 2016, just as we've seen over the past few months. And of course, one of the key Trump trades has been betting on the greenback. So maybe yesterday's pain and this morning's gain is a taste of the uncertainty and the volatility that we can expect in 2025 and the 4 years ahead. But let's go over to Asia now. We can actually speak to our guest, Adam Ramey, who is Associate Dean of Social Science and Associate Professor of Political Science at NYU Abu Dhabi, about Donald Trump's first day in office. Really good to have you with me, Adam. We knew that this was going to be a day of uncertainty, a year of uncertainty, but we now have a little taste of what it's going to look like. What would you say we've learned in the past 24 hours, and how different is the approach of the second administration going to be from the first? More policy-focused, perhaps?
Yeah, I mean, this has been such a dramatic change from 2016. You know, in 2016, Trump was elected somewhat surprisingly, I think, even to him. He had to quickly put together a team around him, given his lack of practical political experience. Things were done haphazardly. Even his inauguration in 2016 was, or early 2017 rather, was pretty sparsely attended. Very little focus on policy in his inauguration speech, and a series of early fumbles in his initial attempts at using executive orders to achieve his agenda. I think what we see here in this second Trump administration is a lot more confidence. I think Trump knows how the system works now. The people around him, I think he trusts considerably more. They're not the old Republican Guard insiders. They're people who are Trump loyalists. I think he has a very clear agenda. And the fact that he won both the popular vote and the electoral vote, I think Trump feels confident. He's got a mandate for change, particularly on things like immigration, on things like trade. On things like, he mentioned transgender issues and just general diversity, equity, and inclusion matters. I think Trump he's relishing right now. He's celebrating his massive victory, and I think he's pretty confident about his ability to deliver on his promises.
Well, if he's so confident on trade, Adam, and he's got a mandate there, why weren't tariffs announced up front as part of the initial policy announcements?
Well, I think one of the things that will remain to be seen is whether or not the talk of tariffs is a bargaining chip or if it's an actual policy. On the one hand, in his inauguration speech, Trump talked a lot about President William McKinley in the late 19th century and how tariffs helped to build American industry and were great. But I think at the end of the day, a lot of folks have suggested that his talk of imposing high tariffs on major American trade partners is a bargaining chip to get them to come to the table and to agree to the trade terms under his watch and based on his preferences. We'll see how it all shakes out. I think on the one hand, raising those tariffs would I think deliver on something that he mentioned in his campaign. But on the other hand, I think that it has major ramifications for the costs of goods at home. And indeed, one of his central campaign promises was to bring down prices. And if retaliatory tariffs get placed on American goods, and similarly, we have a massive import tariff on things coming in, I think it's going to have a dramatic increase on prices domestically, and that would be counterproductive.
OK, well, let's just take a listen to some of what Donald Trump had to say when it came to China tariffs.
China charges us tariffs, and we charge them very little, except for what I did. I put we took in hundreds of billions of dollars. But until I came along, China never paid 10 cents to this country. They ripped us off, and they never paid anything.
Adam, do you think that the tariff policy on China, the stance, has been shaped somewhat by that call with President Xi on Friday? I mean, he didn't single out China on day one immediately. Do you think that the US-China relationship this time might be less fiery, a bit more deliberate?
Yeah, so, in a way similar. So I don't know if you remember back during the first Trump administration, Trump came into office and began with a lot of very aggressive rhetoric toward Kim Jong-un in North Korea. And then within a series of months, they actually developed a friendly working relationship, somewhat paradoxically. And I think that the same might be true here with China in the second administration. That is, during the campaign, he talked a big talk about China and about all of its problems. But at the same time, he's actually, had spoken positively about President Xi. And indeed, I think that there's a possibility that they might actually be able to work out a lot of these things behind closed doors. And moreover, I think that, one of the telling signs from Trump's first day in office was his attempt to sort of stop the ban on TikTok, which was considered to be a major policy achievement of the late Biden administration. The Supreme Court 9-0 ruling in favor of the decision made by Congress in consultation with the president to ban TikTok unless it was sold to non-Chinese entities. This was seen as sort of a major stance against China in terms of United States cybersecurity, and Trump came in right away and put a pause on it and is attempting to halt it. And so I think that it would be unsurprising to me, given all of these things, that the United States actually takes a long-term, softer attitude towards China, particularly if President Xi continues to stroke President Trump's ego.
And how much of a priority do you think the Middle East will be for Donald Trump in his second term, Adam? Because, yes, there's a ceasefire deal in place. Yes, it arrived on the eve of his inauguration. But going forward, how much leverage do you think he'll actually want to use to get that deal to phases 2 and 3?
Well, I think that for Trump, his major agenda is to make America great again. And to him, sort of the conflicts that America has indirectly or directly been involved in with major allies around the world are a distraction. I think that ending the conflict between Israel and Gaza ending the conflict between Russia and Ukraine are major priorities for him, not because I think he has any great interest in foreign policy, but because he wants to achieve his domestic goals. He wants to focus on making America the economic giant, or continuing to have America be the economic giant that it is, ramping up domestic energy production and projecting strength abroad, but without that being the central focus. In fact, talking about the endless wars that the United States has got involved in under previous administrations was a central campaign focus of his. So I think that he wants it over, and he wants deals. And the fact that he sent an envoy over to the region to help to speed along the negotiation of the ceasefire, even before he took office, shows that commitment. How this is going to play out in the days ahead, and what exactly are the terms that he's going to demand of U.S. partners in making sure that the ceasefire continues, we'll see.
Yeah. Okay, Adam Ramey, Associate Dean of Social Science at NYU Abu Dhabi. We'll have to get you back as the negotiations continue, but thank you so much for now. Now to Davos, because it's day 2 of the World Economic Forum, and President Donald Trump's due to deliver a virtual address later this week to the global elites. Our very own Rachana Mehta has been speaking to the Mubadala Deputy CEO Waleed Al-Muhari, who told her the US remains the best investment option in terms of risk and reward, despite the uncertainty around his new administration.
When I look, for example, at the United States, which is the largest destination of capital for Mubadala, accounting for about 41% of our assets under management. You know, I look at the risk reward and I say the United States is still the best risk reward that I see, globally speaking. But you see growth in Asia, and you see places like India, you see a resurgent Japan, you see China as they cautiously think through how they're going to get out of kind of the evenness that they're currently in at the moment. And I look and I say, listen, there's opportunity out there. And when you match opportunity together with the theses and our outlook in terms of how we want to deploy capital, I see that as a recipe for deploying capital. We've always thought about how we want to deploy capital based on how we think about innovation. We've always thought about, you know, where's productivity going to come from? Where are we going to see those businesses that are going to make the most difference, globally speaking? Yeah. And sometimes that's in technology, and sometimes that's in life sciences, and sometimes that's in consumer, and sometimes that's in credit, or wherever it might be. But the truth of the matter is that I'm pretty cautiously optimistic, which, if you asked me 24 months ago, might have been a little bit different.
Okay. Well, you also benefit from being a long-term investor, right? Perhaps less concerns with short-term cycles. Today is the inauguration of President Trump coming back to office. How do you think the return of the Trump administration will impact some of these mega trends and long-term themes that you're focused on?
So the beauty of being a long-term investor is that you can ride out whatever volatility or waves you might encounter. And we don't know what's going to happen. We don't know if there's going to be increased economic tension with China, what will happen on the geopolitical front with Russia and the Ukraine, and what's happening in the Middle East. But I do remain confident that I think with the mix that we have in our portfolio, a mix of stable cash-generating investments with some of the forward, future-looking investments that we make, that I think we'll be really well positioned.
So that was the Mubadala Deputy CEO Waleed Al-Muhari speaking with Bloomberg's Rachana Mehta in Davos. A bit of a chillier seat than she usually has here in Dubai. We'll be speaking to her later in the programme. But coming up, calls for Kenya's President Ruto and security agencies to take immediate action to stop criminal gangs invading tea estates. Tea, my favourite subject. That'll be next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai, where it's just gone 8:48. But let's go to Africa now, where criminal gangs are invading tea estates in Kenya's Rift Valley growing region, plucking tea crops and selling them to small-scale growers. Dozens of farms, including ones owned by London-listed Camellia, are suffering millions of dollars in losses, according to an industry lobby. We can get more on that drama now with Bloomberg's Ondiro Oganga. She joins us from Kigali, Rwanda. Ondiro, what is behind this invasion of the tea plantations by the locals?
Hi, Lizzie. So the bone of contention here is land dispute and also a long-standing tiff where locals feel they're not getting the maximum benefits of this farm setting up shop and operating from the region. And we've seen local members of parliament calling on their people to invade these farms, including areas of Nandi and Kericho County. Bloomberg has actually seen photos where these invaders have set up shack-like structures across the farms and also on the runway. And you have Kenya Tea Growers Association saying there are over 100 to 200 invaders, and the number continues to grow, and they're occupying about 200 hectares of these tea farms. We also have Eastern Produce Kenya, which is part of the London-listed Camellia, saying that they're suffering losses of up to 30 million Kenya shillings on a monthly basis because their formal tea pluckers cannot work for the fear of their safety and security. And you have these invaders that are plucking the tea, they're selling it to smallholder growers, and then these growers are then auctioning the tea, making the money and bringing losses to some of these tea farms.
Strained, you might say. Well, looking back at the performance of tea production in 2024, what can farmers expect this year?
2024 was a slightly decent year. The first 10 months of the year, we saw tea output grow by 7% year-on-year to 495 million kilograms, which was attributed to favorable weather in the first 4 months of the year. And also tea earnings jumped up by 16% year-on-year to 210 billion Kenya shillings. However, there still remains a big challenge. 3 years ago, Kenya set reserve price to try and cushion farmers from losses in an oversupplied market. This reserve price was $2.43. And what we saw was buyers were beginning to snap low-quality tea. There has been a glut of tea of up to 100 million kilograms, and it has whittled down to about 15 million kilograms as of October, according to the government. But this is still enough to brew 7.5 billion cups of tea. President Ruto says he's trying to find a way to clear this backlog. And as a result, prices have taken a hit, not just in Kenya, but also in neighboring Uganda. And you have the Vice President of Trading at Bronxville saying severe implications await Kenya's tea industry if they're not able to clear that tea backlog, rein in production, increase the quality of tea, and fetch good prices in the market.
Billions of cups of tea. You've left me parched, Ondiro. Ondiro Oganga, we thank you for that update on that key commodity there. But let's stay in Africa to other top stories now. Nigeria has agreed to allow telecoms providers to increase tariffs for the first time in 12 years. The 50% adjustment was half of what companies, including MTN Nigeria, had asked for to weather the harsh economic conditions. The West African nation saw a 41% depreciation in the naira against the dollar last year, and inflation running near a 3-decade high. Elsewhere, South Africa's second biggest party has criticised a government plan to start a $5.4 billion fund to boost black-owned businesses by taxing existing firms' profits. Under the plan, companies have to contribute 3% of their annual after-tax profit to deliver to the development of black suppliers. The opposition Democratic Alliance says that the fund could very easily become a bottomless pit for taxpayers' money. And some water bottling companies in South Sudan have halted production after the government introduced a tax on plastic materials. The Association of South Sudan Manufacturers says factories have run out of plastic bottles following a standoff with customs in clearing fresh supplies. The 2-week deadlock imperils the supply of safe drinking water for the 1.5 million people living in the capital, which lacks piped water after decades of war. Well, those are some of our top stories from Africa. But let's get back to Davos now. Investcorp, the Middle East's largest alternative asset manager, could look at a deal with a strategic investor or an initial public offering in the next few years. Our very own Rachana Mehta spoke yesterday with Executive Chairman Mohammed Al-Ardi, who said that the firm would look for a liquidity event sometime, whether by a strategic partnership or even by going to the public markets. Take a listen.
We're really convinced about the sectors that we're in. The couple of mandates that you talk about, which is around $1 billion from institutional investors in Asia, was really to invest in real estate in America, and particularly in the logistical sector. So we're really very, very positive about that. We think it's the right thing. In Asia also, we are really expanding more, both our presence and our fundraising. The Malaysian pension fund has given us a mandate of over 110 million CIC. We launched the Golden Horizon last year with them to go along with the pre-IPO fund in the Gulf to really deploy in the Gulf and in China.
You've been in the credit space for a very long time, but private credit has really taken off in the last year or so. Do you think we're getting to a point now where there are too many players entering into this market?
I don't think so. I think credit is growing nicely, and so far I think everyone is abiding with the rules and the opportunities. Our credit business last year been very active. We've done 6 CLOs. We've transacted over $2 billion. We refinanced, and so I think I think credit is doing well and bringing investors good returns and returning their equities.
I've got to ask you, there's been quite a little bit of turnover in Investcorp over the last couple of months. Some departures, some new hires. Is the strategy of the fund going to change? Can you give us an update on how you see things panning out and all these changes, what they mean really for investors?
So, Jumana, as you know, in the last few years, we have really expanded and grown a lot. Now, at $55 billion, we're in the right markets, in the right asset classes. We've streamlined our strategy and we've refreshed our leadership and management teams. And so, looking forward in the next few years, I will not be surprised if we look for a liquidity event sometime, whether by a strategic partnership or even going to the public markets again.
So, liquidity event as an IPO?
It could be an IPO, could be a strategic partnership in the right time.
What a kicker. Investcorp's Executive Chairman Mohammed Al-Adi speaking to Bloomberg's Rachana Mehta in Davos. What a great conversation. We'll have plenty more of them for you from the World Economic Forum, although I'd like to say I'm warmer here than I think Rachana is there. But let's just check in on these markets as we get towards the end of our first hour of Horizons. We have futures pointing higher as Wall Street is set to come back from the Martin Luther King Day holiday yesterday. Euro Stoxx 50 futures lower, though, down 0.4% as we get towards the cash trade in Europe. It's been a choppy 24 hours. The Bloomberg Dollar Spot Index now up 0.25%, very much processing what we've heard from Donald Trump on day one in the White House. We're going to have more analysis of that next, and we'll go live to Davos. We'll get the latest from Rachana at the World Economic Forum. She's going to be speaking to the South African Reserve Bank Governor next. So stay with us. Jennifer Zabasaja will join me from Johannesburg. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning.
The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world.
President Trump signs a slew of executive orders at his inauguration celebrations, targeting trade, energy and border control, as well as reversing a whole host of Biden-era policies. The dollar jumps and Asian stocks trim some of their opening gains after the US president says he's planning tariffs on Canada and Mexico, but for now, holding off on China. Plus, Trump expresses doubts over the success of the three-phase deal in Gaza and cancels an executive order sanctioning violent Israeli settlers in the occupied West Bank. Well, a very good morning. It's just gone 9 a.m. across the Emirates. I'm Lizzie Burden in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Lizzie, just a few hours into the Trump 2.0 administration, a raft of news to follow. Markets are reacting to it, and the celebrations are still continuing in Washington.
They are indeed, and they look resplendent in their black and white at that Liberty Ball we played earlier. But Jen, I said it before, I'll say it again, call the physio, because it has been whiplash in these markets over the past 24 hours, not least for the dollar, which is now showing a bit of recovery, higher 0.25%. But it comes back to these tariff announcements. It seemed like there was going to be no mention of tariffs on day one. Then we got a trickle of announcements, and we'll dive into them in more detail later in the show. But futures pointing higher on Wall Street. Relief is what it is on Asian equities, higher 0.4%. Brent, though, weaker 0.2%. And we're going to continue to watch oil because perhaps we'll get more declines as we get more of a fleshing out of those drill, baby drill announcements, perhaps. But let's just zoom out. Let's look at the dollar story over the past few years, because if you remember back to Donald Trump's last presidency, you also saw a rally in 2016 before he got elected, and then you saw the dollar falling 10% in the year that followed his election. So are we going to see a similar sort of price action this time around? Look here at the positioning data, and it suggests that we might. And of course, Jen, betting on the greenback has been a really popular part of the Trump trade. So maybe yesterday's pain and this morning's gain is part of the uncertainty and the volatility that is going to be with us for the next 4 years. It's certainly been the case in the Asian session this morning. Let's go to Avril Hong in Singapore for an update on how Asia markets are embracing Donald Trump on day one. Avril.
Absolutely. I mean, we've been seeing this volatility in equities in the region already. The region's benchmark dipping slightly lower. But I thought I'd just focus on what we're seeing in China, because that relief rally is underway, as you alluded to, with Chinese stocks back from the lunch break on the mainland and in Hong Kong. We're seeing, interestingly, the Hang Seng Tech, I think, extending gains from the morning session and to the highest level since at least October. This idea that we're not getting these big bang tariffs on day one, and some of our colleagues on the MLive team have argued this means that ultimately the impact on tariffs is going to look very different from, say, if we had aggressive approach from the get-go. So traders are choosing, I think, today to focus on the positives, and you're seeing that outperformance in Chinese stocks. For the renminbi, the story is a little different. We've seen it rebound slightly earlier in the session, but it's struggling a little now. And we have the likes of OCBC saying that, you know, it's likely to trade sideways until we get tariff clarity. This is what we're seeing in Chinese assets for now, guys.
OK, Avril Hong, we thank you in Singapore. Jen.
And let's turn back to our top story. President Trump has delayed unveiling China-specific tariffs, instead calling for a study into unfair trade practices globally. But he says Mexico and Canada may face levies of up to 25% as soon as next month.
We're thinking in terms of 25% on Mexico and Canada, because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in, and fentanyl to come in.
When do you think you would enact those?
I think February 1st.
Bloomberg senior editor Derek Wallbank joins us now. Derek, give us some more insight into some of the raft of announcements that we got from Trump just in the first few hours of his new administration.
Well, we're talking about dozens of different executive orders and actions that sort of span across from energy to how the federal workforce is constituted. It really did run the gamut. And in addition, there were a couple of promises, as you noted, and forecasts where Donald Trump was suggesting that there could be tariff moves coming within weeks against top allies, Mexico and Canada, of about 25%. All of that has had market implications, right? He did, though, hold off on China actions on day one. He granted a 75-day stay of execution for TikTok, during which further room for negotiations could be had. There's no sign yet that TikTok's Chinese parent company wants to sell that, but we've heard on an awful lot of rumor and speculation in terms of what may actually happen there. But overall, look, Donald Trump was somebody who, when he came into office the first time, there was a lot of talk about how he took a while to sort of get up to speed and understand what he was doing. This time, it is absolutely out with a bang. He made a big point to try and go as shock and awe as he possibly could.
And Derek, what does that mean for what comes next? Because we did hear Trump saying it's America first. He wanted to, again, drill, baby, drill. What should we expect then over the next few days, some of the implementation we might actually see?
Well, I think that there's a couple of things that are going to take a certain amount of time, right? Trump said that he wanted to pull the U.S. out of the World Health Organization. That's something he wanted to do before. This is more of a signal of intent of what he signed. So that's going to take a while to go through. There are going to be several things here challenged in court. One of the first ones is going to be restrictions that Trump wants on birthright citizenship. We're still sort of looking over the fine details of it, but basically what Trump would do, there's been a long-standing idea in the United States under the 14th Amendment that if you're born in the U.S., you automatically get citizenship. Trump would seek to restrict that and say that if you're here in the U.S. illegally, or if you're on a temporary status that is legal, think students, think tourists, think people who are on work visas, that may not necessarily apply to your children. So that's going to be challenged in court. Undoubtedly, there will be others that are already being challenged in court in terms of some of the federal workforce orders. So I do think that that's going to be one of those things. And the other thing I would mention is that there are going to be some of these that come with, I would say, steep political costs potentially. Trump moved to pardon nearly all of the people involved in the January 6th insurrection. That is not going down well among a lot of people who had questioned whether or not Trump was even going to go that far and had been opposed to any action like that for those individuals. That was a really sweeping move, and it will have consequences politically for perhaps a vast amount of time.
Yeah, and the irony that the inauguration happened in the same place where we did see January 6th is fascinating as well. Bloomberg's Derek Wallbank. Derek, thanks so much for the update this morning.
Now, as Donald Trump was inaugurated indoors because of the sub-zero temperatures in Washington, over on the snowy slopes of Davos, the busiest place to be watching his swearing in was none other than Ukraine House. Business and political leaders gathered at the annual World Economic Forum meeting and were closely watching for Trump's comments on Russia's war on Ukraine. We could go now to Davos. We can speak to our very own Rachana Mehta. Ju, I've been doing my best to keep your seat warm for you, but tell us, what's the mood in the mountains in response to Donald Trump's inauguration and this slew of executive orders we've had on day one?
Yeah, good morning, ladies. Good to be with you. Well, you've been talking about the temperature here, and I've got to say, for now, I'm indoors. We'll see how things change in the next half an hour. But overall, the feeling, I think, is one of uncertainty. And the big question is not who is here, but who is not here. Yesterday, of course, the focus was very much on that inauguration and what President Trump was going to be talking about. And we found out pretty quickly what his priorities were going to be. He wasted no time at all cutting to the chase on some of the many topics that he discussed on the campaign trail. And for a while, people thought maybe he was going to back away talking about his trade priorities or tariffs. But of course, many hours later, it emerged that indeed he would be looking at applying 25% tariffs on Canada and Mexico. Why does this matter? Well, Davos is an opportunity for some of the biggest business leaders, industry leaders around the world to come together to discuss the pressing issues of the day. This year, the theme is collaboration in the age of intelligence. So that tells you a lot about the focus of this year's forum. On one hand, we're living in the age of intelligence. You talk about technological advances. You talk about artificial intelligence and how that's going to revolutionize the world. On the other hand, the collaboration, where is that going to come from in an environment where you have a new leader of the U.S. and of the free world pulling out of some of these historic accords? Yesterday, President Trump announced that they're going to be pulling out of the Paris framework, putting up trade barriers, announcing tariffs, pushing allies within NATO, he's spoken about this on the campaign trail, to increase defense spending, has even been critical of the amount of military aid being supplied to Ukraine. So all of these are issues that leaders are going to have to contend with. And so there are going to be political ramifications and economic ramifications. And then also you need to think about regulatory ramifications as well. And that's a really key issue as you think about how the world is going to evolve over the course of the next decade or so. Trump is back, but his impact will have many, many years legacy.
And Jemana, you've had some great conversations already. I wonder, what have been your key takeaways so far? What are you looking forward to this week at Davos?
Yeah, you know, I think what's been good so far is just the opportunity to take stock at how people are thinking about the global economy. Because, of course, yes, Trump is back, but at the same time, growth seems to be doing okay. And one of the questions I've been putting to the people that we've spoken to is how they're sort of feeling about the state of the global economy. And by and large, most people do agree that the U.S. economy does stand out relative, say, the likes of the European economy or UK economy, as you know very well, Lizzie, where there's a real productivity and growth gap issue versus the United States. So many of the voices that we've spoken to, including the likes of Mubadala, Investcorp, you know, largest alternative asset manager in the Middle East, of course, largest sovereign wealth fund in terms of capital deployed last year, that's Mubadala, both of them saying that they see ample opportunities still in the United States because that's where the growth is. And that's where, to come back to what I was saying about the age of intelligence, most of the AI opportunities are. So people are still optimistic about the investment landscape. But interestingly enough, in the Middle East and the region that we speak to the most, they're also not completely ruling out prospects in Asia. Investcorp are telling me that they had raised $2.1 billion fundraising from Asian accounts. They still see opportunities China. Even Mubadala were saying that within China, they're beginning to see some signs that things are picking up again as well. So I felt as though the initial takeaway, at least from the Middle East accounts that we spoke to, is slightly more optimistic, perhaps cautiously optimistic about the state of growth.
Yeah, really interesting. You mentioned the UK growth push. Rachel Reeves to meet the JP Morgan and Goldman Sachs CEOs to try and boost that investment that the UK so desperately needs. Jemana Lesetja, great to talk to you on the ground in Davos for us. We're going to have plenty more still ahead for you right here on Horizons. We'll hear why Callanish Capital says that it's important to remain in US tech, even as some traders fear that the AI boom has peaked. We'll get more on their strategy next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The dollar rallied and Asian stocks briefly erased opening gains after President Trump said he was considering enacting tariffs on Canada and Mexico. Joining us is Haig Bathgate, director of Callanish Capital, joining us from our London offices. Haig, great to get you on. So we've been speaking all morning about the slew of announcements that we got in the first few hours of this new Trump administration. As an investor, what are you focused on?
Yeah, so look, I think with Donald Trump, the bark's always worse than the bite, so to speak. And I think that's just what we're seeing now. There's a lot of pre-negotiation going on and trying to bring people to a negotiating table, I think, rather than these headline-grabbing, big tariffs that they talk about. I mean, it's quite interesting seeing what's happening with China. It's now turned into a big play on, what you can negotiate on TikTok in exchange for going easy on tariffs. And of course, tariffs mean different things to different countries. In China, 50% of all goods are not subject to tariff and are exempt from tariffs, things like iPhones. So I think there's a lot of devil in the detail with this stuff, and you kind of have to look past the big headline-grabbing announcements from Donald Trump.
Haig, do you see then Chinese stocks potentially as a buying opportunity if we are to get this softer rhetoric on tariffs to China?
Yes, I think that's the interesting thing, isn't it? I mean, he's been kind of cozying up to China over the last few weeks. Of course, we know this can change in a sixpence, but I think what's quite incredible to me is just the sense of purpose that he has. He's surrounded by much more credible people. He hasn't fallen out with the tech contingent this time. And of course, while he's talking about, putting a ban on illegal immigration, of course, he's been quite supportive of the kind of the high intellect immigration that you need for the tech sector and so on as well. So it seems a lot more nuanced this time around. And again, we just have to see how things pan out. But it's quite interesting as well, just seeing the rhetoric overnight about Canada, and he's tying this in with immigration there as well. So there's a very clear agenda, I think, that he's pursuing, and it's very different, on a case-by-case basis with each country.
So, Haig, how do you assess this, though? Because we are seeing much of the price action is being driven by what he's saying. We're seeing the dollar strengthen, some of the currencies, like the peso and the Canadian dollar, also weakening. I mean, how do you trade then based on a lot of this bark, as you were saying?
Yeah, so I think a lot of it just have to let the dust settle a little bit. I mean, again, we need to digest there's so many things being announced, and they're not mutually exclusive. So what impacts one country might also have crossover impacts in other. For example, Europe seems to be caught in the crossfire of everything at the moment, and it's sort of struggling with its own economic growth agenda too. So I think certainly we'd be looking to let things settle down, not make any huge calls at the moment. And see where we are in a few weeks, or possibly 4 to 6 weeks before we'd make any material changes.
Haig, you're sitting in London. Do you have that same sentiment when it comes to gilt, perhaps? What do you see potentially as the trajectory over there?
Yeah, so look, I suppose the kind of satisfying or kind of reassuring thing overnight is that the UK wasn't in the firing line for tariffs, given some of the rhetoric going back towards the UK and the US, probably because it's not relevant enough compared to these other big economies. But yeah, look, things are pretty grim, I think, in the UK and by extension Europe as well at the moment. Some of these so-called pro-growth strategies that we're supposed to have in the budget have just not been pro-growth, and obviously we're faced now with more belt tightening. To me, that means that the UK gilt market looks incredibly attractive. Yields have been sucked up on the back of what we've been seeing in the US, but the reality is I think we go into quite a deflationary environment in Europe particularly, and the UK in the coming 12 months.
So Haig, what would you say is the top risk, though, to some of those calls that you're making? Of course, part of it is Trump and a little bit of the volatility that is likely to come. But outside of that, I mean, what's the risk to your call there?
Yeah, so look, I think we have to see what happens with the broader inflationary environment. If we've got inflation wrong and we start to see persistent wage growth coming through, we've got a wage release in the UK today, or excessive spending in the public sector in the UK, that could push up inflation. But I think generally, as we're seeing a widening out of this AI implementation, it's gone from the sort of mega cap chip producers and so on, like NVIDIA, and it's now sort of spreading down to these second order effects. I think what we'll see is that this generative AI is actually very, very deflationary, and we'll start to see the implementation of that this year. So, of course, if we're wrong about that, if there's a delayed implementation, if we see trade barriers start to restrict the use of that technology, then that could interfere with that view. But I think generally the biggest risk at the moment is not being weighted in US tech, and you can see that the US is allowing large tech to have this effectively this monopoly that you wouldn't ordinarily be allowed to have, and they're sort of bullying anything which is seen as a threat to US dominance, TikTok being the latest case in point. Those companies have to be listed in the US, and they have to be under the control of the US. So I think if you want exposure to that, you have to have exposure to the S&P 500.
Wow, we're just in the opening innings, Haig, of this new administration, but clearly a lot to come. And we also are going to get some UK jobs data later today, so we'll see how that affects your call as well. Haig Bathgate, Director of Callanish Capital there in our London office. It's great to get you on. Now, coming up, Saudi Arabia's Minister of Economy and Planning discusses plans to work with the second Trump administration. More on that interview from Davos next. This is Bloomberg.
The Kingdom and the U.S. have a long-standing, strong relationship that spanned 8 decades. It's been strong regardless of which administration was in office. We look forward to working with the second Trump administration, as we have with previous administration, on important work, including addressing some of the challenges the global economy is looking at, such as tepid growth.
There's been talk about whether Saudi Arabia is actually going to join the BRICS unit. And so far, nothing has been done on that front. So why the delay?
So it's important to keep in mind the Kingdom is always focusing on fostering more global dialogue. We've been invited to the BRICS, similar to how we've been invited to many other multilateral platforms in the past. Historically, we assess many aspects of it before a decision is made.
Yeah.
And right now we're in the middle of that.
Looking ahead, the Saudi economy, obviously there's been a massive diversification push. And whenever I speak to you and your colleagues, we talk about the non-oil sector. Specifically, which of the sectors do you think are going to be driving Saudi growth in the years to come?
So Vision 2030, which is our program to basically long-term restructure our economy, is on track and moving with a lot of momentum. One of our focus areas is building more human capital potential and having human-centric, human-led growth. The other is diversifying the economy. If you look closely to our economy, you'll see that the non-oil economy is growing. More sources of growth are being added, where it's coming from tourism, culture, entertainment, sports, but also more long-lead sectors such as mining, industry, what we call Industry Plus, shipbuilding, auto manufacturing. All of these are proving the power of diversification. Our numbers in the last quarter and the quarter before wouldn't have been this strong if it wasn't for the political will and decision and the work put in to start sectors or reinvigorate old sectors.
Yeah, do you think the international community and international investment community actually see what's going on there and are encouraged? Because we still speak to many people who come to the Kingdom for fundraising as opposed to actually deploying and mobilizing capital into Saudi Arabia.
So the Kingdom is a global investment powerhouse, but we're seeing a shift. People are looking for smart capital coming from Saudi, given we have a strong sovereign wealth fund. But our sovereign wealth fund is also investing locally to start new sectors, and that's attracting a lot of investors. A lot of investors are putting in more effort, time, and energy into the Kingdom, and they're inspired by what they're seeing, especially the youth, young professionals in Saudi.
This is Horizons Middle East and Africa. Our top stories this morning. Straight to business. President Trump signs a slew of executive orders at his inauguration celebrations, targeting trade, energy, and border control, as well as reversing a whole host of Biden-era policies. The dollar jumps and Asian stocks trim some of their opening gains after the U.S. president says he's planning tariffs on Canada and Mexico, but for now, holding off on China. Plus, Trump expresses doubts over the success of the three-phase deal in Gaza and cancels an executive order sanctioning violent Israeli settlers in the occupied West Bank. It has just gone at 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Lizzie Burden in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. Jen, what a session it has already been in these markets with all the uncertainty we knew we were going to expect from Donald Trump.
I know, and maybe people having a bit of deja vu with the first administration, but definitely this one is looking quite different than what we saw with Trump 1.0. But let's just take a look at where markets are positioned ahead of the trading day. We did not have a session of trading in the U.S. on Monday because of the Martin Luther King holiday. So very curious to see how these markets move, with U.S. equities right now pointing towards a stronger open. But really a lot of the price action is being driven by some of the comments that we get from Trump and whether or not he's actually going to enforce a lot of those promises that he made. We're seeing U.S. yields backing off ever so slightly. The U.S. 10-year yield at 4.54% right about now. What's been very interesting with a lot of the moves is the moves with the dollar. And in particular, we're seeing some of the currencies that Trump has actually targeted verbally having the most reaction, that being Mexico and Canada. And we're seeing the Mexican peso really feeling a lot of the brunt of that as we get a stronger dollar. Brent crude also marginally down today at just over $80 a barrel. And back to the dollar, we're hearing a lot from our MLive team about potentially what we will see from the U.S. currency, and potentially we will see even more strength in the currency. And that is coming after a Monday session where we did see the greenback sliding more than 1%. It was its worst day since 2023, but MLive again saying it's likely to climb towards the 2022 peak of 1,361, then to go back lower. And what that means for the rest of EMs and the currencies more broadly across the world is really what we're going to focus a lot on. Let's check in, though, on the yen and stick on currencies and get to Avril Hong in Singapore. Avril, what are you watching?
Yeah, I mean, you just highlighted some of the dynamics for the greenback. We are today seeing the dollar recoup some of yesterday's steep losses. So it's interesting to see how, even against this backdrop, the yen is climbing. And not just that, it is the only one, I think, among the G10s that is managing to clock gains. And I think this speaks to the idea, the continued bets that the BOJ is going to hike on Friday. Indeed, if you look at swaps, it's still about 90% pricing in that possibility. We have our Bloomberg economics team flagging that we got through day one of Trump without major negative surprises for the Japanese economy. And this sort of green lights a hike for the Japanese central bank. And if you recall, if you think back to December when the Governor Ueda gave a pretty dovish presser, the two things that stood out was his focus on the spring wage negotiations, but also Trump administration policy. So this sort of, clears a hurdle, one of them out of the way, at least for now. Of course, things can quickly change between now and Friday. The other thing I would just highlight is the big swings we're seeing in the Japanese yen. We went from, in a day alone, above the 156 level to below the 155 level. I think this is not helpful for Japanese authorities. So something to keep in mind as well as we keep an eye on the yen. Guys.
Thanks so much, Avril Hong in Singapore for us. Let's turn to the Middle East. The Middle East also got its fair share of executive orders on Trump's first day back in the Oval Office. The White House says the U.S. president has now canceled an executive order that enables sanctions against violent Israeli settlers in the occupied West Bank. On Gaza, Trump expressed skepticism that all phases of the Israel-Hamas agreement would be implemented.
Gaza is interesting. It's a phenomenal location on the sea. Best weather, everything's good. It's like some beautiful things could be done with it, but it's very interesting. But some fantastic things could be done with Gaza.
How do you see the future in governance for Gaza?
Well, it depends. I can't imagine you could have, you certainly can't have the people that were there. Most of them are dead, by the way, right? Most of them are dead. But they didn't exactly run it well.
All right, phenomenal location from Trump there. For more on this, Bloomberg's Oliver Crook joining us now from Tel Aviv. Oliver, let's put aside some of Trump's comments for a minute and just start with the second day of the ceasefire that we did see. Give us some of the updates that you're watching on the ground.
Yeah, so listen, Jen, let's start with the good news. The good news is that now we're almost 2 days into the ceasefire, and it seems to have held with the fighting that has stopped within Gaza, the beginning of the withdrawal of Israeli troops, and, of course, the exchange of hostages for prisoners that we saw on Sunday, which means that the ceasefire plan, as it has sort of been spelled out already, is on track to continue, which would mean that this coming Saturday there would be the release of probably 4 more hostages in exchange for more Palestinian prisoners. And so from that perspective, things are really progressing well. The issues where you can have a little bit more sort of footnotes and a bit more potentially negative news is, of course, you still have tensions extremely high, very combustible, particularly in the West Bank, where you've seen friction over the last few days. We also saw part of the good news is that about 915 trucks, according to the United Nations, have been allowed to enter into Gaza, which is higher than many of the estimates that I was hearing going into Monday. The other issue, of course, is the fact that there is going to be a real question for the Israelis, this sort of test period here, to see to what degree, as they sort of withdraw troops from the more populated areas of Gaza, to what degree Hamas is able to sort of re-exert its control. There have been some sort of, it's very hard to tell over the last sort of 48 hours because it's been so short period of time and there's such few journalists comparatively within Gaza, the degree to which they're able to re-exert control. That is going to be absolutely fundamental in sort of guiding what the Israelis want to do next in the next phase of this war.
And Oliver, when it comes to implementation of a lot of what we're seeing on the ground there in the Middle East, a lot of it will be contingent on what we see from the Trump administration, his new foreign policy head, Marco Rubio. How much of what Trump is actually saying will actually be able to get done?
Yeah, so listen, Jen, I think that the Trump effect is absolutely crucial to the future of what's going to happen here within the region. I mean, listen, I think you talk to the people here in Israel, and everybody sees that basically he was a fundamental part in getting the ceasefire over the line because of the pressure that he exerted basically on all the parties that went into agreeing to this deal. But again, as you mentioned, going forward, there's a real question about what his policy is going to be. If we have any indication of it, we got some of it yesterday with that basically revoking the executive order that Joe Biden put in place against that basically allowed the U.S. to sanction some Israeli settlers that were sort of deemed violent. He's also expected to roll back some of the arms restrictions that Biden sort of put on towards Israel on certain kinds of munitions. Again, he is seen as basically very fundamentally pro-Israel. Same thing with Marco Rubio, very, very hawkish and very supportive of Benjamin Netanyahu in basically its war aims of basically the total eradication of Hamas, basically at any cost. So that is sort of the things that are being sort of set up going into this. For Benjamin Netanyahu, what is going to be crucial is those guarantees that the Trump administration have allegedly given him that he will be allowed to continue to prosecute this war after the 6-week period if they are not satisfied with what they're seeing in Gaza.
Bloomberg's Oliver Crook in Tel Aviv for us. Oliver, great to get your reporting on as always. Thanks.
Well, of course, the oil market's keeping an eye on the geopolitics, but it's trading lower as well this morning because it's reacting to President Trump's executive orders and pledges, including that threat of tariffs on Canada and his plans to boost domestic energy output. It's been a real swinging session, this so far. Trump declaring a national energy emergency, plans to refill the U.S. strategic oil reserve. Stephen Stapczynski has been watching it with a close, clear eye in Singapore. Stephen, how would you characterise Trump's new policy here? It's not just the direct energy policy, it's tariffs as well that's affecting this market. What can we expect today?
He's back, right? I mean, this is what happened before, and now we're doing it again. So yes, you can't predict this. You don't know what he's going to say. Immediately, when the initially, when you started to see some of the executive orders coming through from the White House, there was no mention of tariffs. There were reports overnight that he wouldn't be implementing the tariffs and he would study it. Even on China, he said that they were still studying whether or not they would do that. But then he had an offhanded remark right here when he was signing an executive order saying, hey, maybe, I'm thinking from February 1st, we're going to do something with Canada and Mexico. And suddenly the market mood sort of shifts. He made comments earlier about filling up their strategic reserve, which is at the lowest level in decades. That's bullish, right? If you buy a whole bunch of oil, but there are no details. So now the market is back into reading the Trump tea leaves, trying to decipher what is fact and what is more just political rhetoric. And I think you're going to see a lot of that. Now, while you're seeing swings in the oil market, I think the mood generally is still bullish because it does indicate that he's, they're going to take a hard line on Russia. The Biden administration, when they were leaving, they put some sanctions on Russian ships, the shadow fleet. He could take a harder line on Iran and Venezuela, which would reduce the amount of crude in the market. And also the tariffs, if they do follow through, could result in higher gasoline and energy prices in the U.S. because while the U.S. is a major producer of energy, they still do depend on Canada for a bit of import.
OK, so do not be deceived, even if Brent is trading flat right now. What about LNG? We had Trump lifting Biden's freeze on new LNG export approvals. How's that going to affect gas exports?
Yeah, I think that's a really interesting story because U.S. LNG exports, liquefied natural gas exports, are set to double by the end of this decade. That's before the Biden pause. Those are projects already approved, under construction, and ready to go. Now, with Trump lifting this pause, you could see the U.S. LNG, already, the U.S. is already the world's biggest LNG exporter. You could see those numbers increase even further. Now, that's not going to be something that's going to happen today or tomorrow. This is something more closer to 2028, 2029, and into the 2030s. But it's interesting because if this does result in projects moving forward, if this does result in Asian and European buyers agreeing to buy LNG from the U.S. for decades under new contracts, this will ultimately not only increase the amount of exports from the U.S. towards 2030 onward, it would also cement the U.S. as the world's biggest supplier of natural gas, essentially for the foreseeable future.
OK, Bloomberg, Stephen Stapczynski, we thank you. Lots to keep across for you. But coming up right here on Horizons, we're going to go straight back to Davos, live at the World Economic Forum. We're going to be speaking to the South African Reserve Bank Governor with Rachana Mehta on the ground for us, bringing us that interview next. This is Bloomberg.
Welcome back to Horizons, Middle East and Africa. I'm Jennifer Zabasajja in Johannesburg. Day 2 of the World Economic Forum is just getting underway. Let's cross over to our Rachana Mehta, who's in Davos, standing by with a very special guest. Rachana?
Jen, thank you so much. Yes, I'm really happy to say that joining me right now is the South African Reserve Bank Governor, Lesetja Kganyago. Great to have you with us. You know, I want to start off, obviously we will talk about the direction of travel for the South African economy, but you and I have had many conversations over the years, and I do wonder whether we are yet again at perhaps another inflection point for the central bank community. Yesterday I was watching President Trump's inauguration and all of the many steps, the declarations that he subsequently announced with the potential imposition of tariffs, 25% on Canada, Mexico, deportation of immigrants, all of that to me, and I'm not an economist, sounds inflationary. Do you expect there to be a big inflationary shock coming from the United States this year?
I think that from an economic perspective, you would expect this to be inflationary. There are just too many moving parts, though. For example, yesterday, we had all of those announcements, and at the same time, you had the oil price decline. For oil importing countries, that would be positive that the oil price is declining. There are too many moving parts. Two things that are of concern. One is that the measures taken could lead to a fragmentation in terms of the global economy and could actually spur other countries to think that they can justify taking protectionist measures. And protectionist measures are negative for global trade, and global trade is the lifeblood of the global economy. That's the first point. The second point is that to the extent that the measures taken are inflationary, it could slow down the disinflation process that the central banks had so steadfastly worked on since the great inflation of 2022. And the risk is then that the accommodation that was increasingly being provided by central banks, or should I rather say, the reduction in the restrictiveness of monetary policy that we had seen over the past year could then be brought to an abrupt halt, but there is also a risk that it might be reversed.
Yeah.
And that is what my take would be, but there are just too many
moving parts. There's so many things I want to pick up on there. When you say reversed, I mean, is there a possibility that actually central banks may have to start a hiking cycle again, given the shocks?
One can't take that off the table. One can't even say what the timing of that would be. What I can say is that these are shocks. Central banks tend to look through the shocks. But the lesson from 2021 is that if there is one shock, you can look through it. If it's a multiplicity of shocks, you might have to move earlier, failing which inflation starts to rise and we end up with a situation.
It truly is
like
amazing how the narrative has changed in the central bank community just over the last few months. The market has priced out a lot of the cuts that were priced into the Fed. What sort of knock-on effect do you think that's going to have on your own decision-making? Are you going to be at the mercy of what the Fed end up doing?
No. The Fed is the Federal Reserve of the United States. They take decisions in the interest of the United States economy. The United States economy is the largest economy in the world. For countries like South Africa, which are small open economies, to the extent that there is an impact on the U.S. economy and thus on the global economy, we take cognizance of that. Our own policy settings move from the point where we say, where is the state of the global economy? What does it mean for the South African economy? And then we calibrate policy accordingly, rather than just following what the Fed is doing.
You've got a 4% inflation target for, forecast, not target, for this year. How would you say the risks are sitting right now? What are the risks?
Again, the risks that we had identified in the previous year had to do with what happens with the energy prices, what is the outlook for food prices, and domestically there were also issues such as electricity prices and so forth. We had now 4 consecutive months where the fuel pump price has actually been rising. So that risk is actually beginning to materialize. But on the other hand, we have seen food prices decline. We had good rains, and we think that we would have a good crop, and that would have a dampening effect on food prices going forward. Again, we have got to continuously assess the balance of risk and calibrate policy accordingly.
Well, I was going to say that, again, interest rate expectations have also shifted within South Africa and the pricing for what you are expected to do over the course of this year. There's only about 1 rate cut priced in. What have you seen in the data that you think has justified for the markets to be more cautious?
Look, markets move all the time, and as for us, central banks, our job is to sift through the data, project what the outlook looks like, and calibrate policy accordingly.
Yeah.
We are going into our policy meeting next week, and we will come with a forecast there and take a decision accordingly.
Yeah. Can I ask you about the outlook for growth? I was reading that in the past 10 years, South African economy has really struggled to grow more than 1%. But more recently, analysts have turned a lot more bullish, constructive about the outlook going into next year because of some of those easing supply constraints that you spoke about, the electricity situation improving. How do you see the growth outlook for South Africa this year?
Closer to 2%. The forecast ranges from like 1.6 to 2%. Somewhere in between there would be a figure. What is important for us in South Africa had been that we had come to grips with the structural challenges. We can back now the issue of the electricity supply constraint and says that we have not had load shedding now at close to 300 days, and it's a function of getting the electricity power plants to function, getting the right people in place, bringing additional capacity from the independent power producers and so forth. It has been a partnership between government and the private sector. That model is being taken into the logistics sector with respect to the railway network and with respect to the ports. And as these constraints are being alleviated, which is what the central bank has always been arguing for, that if you relieve these constraints, you are able to lift the potential growth rate of the economy. Because if we do not lift the potential growth rate, as it stands now, if this economy was to grow by 1.7, 1.9, even 2% this year, we will close the output gap. So it is very important that we lift the potential growth rate so that we do not see inflationary pressures building up as a result of the economic growth accelerating.
Yeah, that's a good place to leave it. Governor, it's always great to catch up with you. Thanks for getting up early to chat with us today. That was the South African Reserve Bank Governor, Lesetja Kganyago. I'll toss it back to you, ladies.
Yeah, great conversation there, Jumana. Stay warm. That's Bloomberg's Jumana Bersetji in Davos with the SARB governor for day 2 of the World Economic Forum. Great to get that conversation on today. Now, still ahead, we've got more big interviews coming up from Davos today, including with Sarah Friar, OpenAI CFO, UniCredit's Andrea Orstel, Aramco CEO Amin Nasser, and Ruth Porat, president of Alphabet and Google. Stick with us for all of that. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. Let's just check in on these markets, and we are looking at the dollar holding much of yesterday's fall on the back of the lack of those immediate one-day tariffs. They're stronger now by 0.33%. Do keep an eye on cable over the next couple of hours. We're waiting for that latest UK jobs data at 7 a.m. London time, likely to show another tick up in pay growth. Futures pointing lower in Europe, but marginally higher on Wall Street as traders return from the Martin Luther King Day holiday. The volatility very much continuing, but that does it for Horizons Middle East and Africa. Jen, it's been great to be with you. It's been a jam-packed couple of hours. I think I need a breather now, but I've been Lizzie Burden in Dubai with Jennifer Zabasaja in Johannesburg. Stay with us for Daybreak Europe. Tom Mackenzie's coming up next. This is Bloomberg.